So we've received a lot of inquiries from companies that want to go public. What kind of companies can actually issue their shares and go for IPOs?
So, right, when you're doing your initial public offering or an IPO, you're basically offering your shares to the mass, right? Whereas previously, before the IPO, only a select group or close group of investors would be holding the ownership of the company. So, to do an IPO, first of all, your company has to be public. So, if you're currently a private limited company, you'd have to convert it into a public limited company. Then what you need to do is you need to hold an AGM or an annual general meeting where the annual general meeting has to decide to go to an IPO. And at that point, you need to be very clear about the equity structure of the company, how much of the shares that you'll be retaining as the promoters, and how much shares you'll be giving to the public, right? If you are furthermore trying to go an IPO in a premium, let's say the share price would be higher than 100 rupees, then you'd have to be operating in profit for the past 3 years. Or let's say if you have a capital of 1 billion or higher, then you can be operating in profit for the last 2 years, and that would be adequate.
Uh, so what changes in a company after it goes IPO?
So, as we discussed earlier, right, after the IPO, the company belongs to the public. It's not a small group of investors that holds the ownership. So, their direct financial interest would be tied up with the company, right? So, you have to be more transparent with your operations, your financials. So, previously, you could just prepare your financials and keep it aside, right? But after the IPO, you'd have to publish your financials even quarterly, right? Not only annually. And annually, you'd have to hold an annual general meeting where you'd have to brief your shareholders about how the company performed previously and what are your plans in the future, right? So you have to be very transparent, basically, and you cannot just spend your money however you want. Whereas previously, you could just buy a Mercedes for your CEO, do whatever you want with your money. But after you've collected the money from the public, you have to be very wise and efficient about how you're using it. You have to be very efficient with your financial management as well and be transparent with your finances and operations.